Hey all, welcome to ShareTrek. This is Raj here. This is our special for the Genomics viewers. Boy, what a day it was. It was a head fake in my opinion because the day started off with a gap down, and then during the day, initially we went below and then we shot up only to retrace back just a little bit at the end of the day, but post market closing, we have been going down a little bit further. I'm thinking that this is just a head fake rally. There are some manipulations going on because nothing has changed since yesterday to today, and without anything changing, if you have these kind of unexplained moves, it's best to ignore them and focus on the technicals. That's what I'm planning to do today, and I'll give you an idea of what is the toll it has taken on genomics. So with that said, I think I would like to go directly into our TradingView platform and start looking at the futures. So we have the Nasdaq futures here. This green candle is the candle for the day. So we started off very low. We started off around 5,588, and when we started, I was thinking that this is going to be really bad because not only had we broken down this diagonal line of support, but we had opened very low overnight. And that kind of created a feeling in my mind that we are going to test this support out here at 5515.50. But that did not happen. In a way, I think that we had to revert back to technical analysis and try to make sense out of this. And the way I make sense out of it is that Nasdaq futures might come down overnight, and maybe tomorrow they would go down and find a support somewhere around 5,639.90. And on the upside, I think if it doesn't come down, then the next resistance is going to be 5,681.50. So to that extent, I think I can see forward, but I don't see beyond that at this point of time. Nasdaq futures. So Nasdaq futures were having a lot of support out here from the two diagonal lines of support. And when we opened this morning, we are already below this diagonal line of support. And the way I saw it was that it had broken two supports. One is this diagonal line of support was broken, and the other was this diagonal line of support which was broken. However, after going down, it went back up again. It opened almost on top of this diagonal line of resistance, went down, and then converted this diagonal line of resistance into a support by the time the day ended. And right now, in the futures market, we are down 0.31%. Our MACD is tending towards the bearish side. I think nothing has changed in the overall position. We still are going to get our April 2nd tariffs, and we are still going to look at the employment numbers, economic data. So all those things are not yet released. I would expect us to resume the same trajectory and be under the influence of the bear flag and follow the bear flag target in due course. That's what I am thinking. And if we look at the 10-year yields, you can see that the 10-year yields have fallen, and they have fallen significantly compared to where they were just a couple of days ago. It indicates that the market thinks that the economy is not in a good shape and it may need some kind of a rescuing. So if you look at the overall headlines that we see in CNBC and in Bloomberg, and also we look at the way gold is moving up, I'll show you the chart for gold out here. So if you look at gold, it's already broken beyond this diagonal line of resistance. I was thinking that we might have to come back down, test some support, and then use that to move up. But no, it has already gone up. So that again indicates that the market thinks there is some problem with the economy. And let us just quickly examine XLP before we go further. See, XLP is also aiming to create the reverse head and shoulder pattern. If that fructifies, then we are going to reach 91.88. And that's a sector which gets a lot of traction when there is a recession or when there is a bad economy. The staples, XLP, excels at that time. And we are seeing designs towards going there. And we have been observing XLP for quite a while now, anticipating the reverse head and shoulder formation. We have a shoulder, we have a head, and we have the second shoulder forming right now. And it needs to cross this red line out here at 83.50. It's just $2 away approximately. In $2, it's going to cross this, and then we will have to reach 91.86. So that's the way it seems to me. And let's go on to genomics. Oh, before I go to genomics, I just want to show you how S&P ended. So S&P 500 ended down this morning, ended down yesterday, but it had not breached this diagonal line of support. And this morning, when we looked at it during the live stream, it was somewhere out here at 5,529.90. That's where it opened. So when it opened, it had already opened below with a gap down. There was a gap down from here all the way down to here, and in the process it had pierced through two resistances, and I was absolutely sure that this is a very strong push, and therefore we were going to test the support at 5393. However, I turned out to be wrong. We bounced back again. The support out here at 5504.37 itself was able to help it bounce back, and in a way I would say that we still have a lot of downs to come, because the bounce back did not even capture half of the candle from the previous day. The previous day's bearish candle, the half has not been captured. I would say that if you include the wick, then probably we are coming close to a half, but I don't think we have covered half of the previous day's candle. To that extent, I think that we'll probably test the support of this diagonal line of support out here. I'm just going to improve the size of this so that you can see it on your smaller devices. So there is this line out here, and tomorrow I think we'll get a support at 5558.64, and our resistance is going to be pretty strong. It's going to be the culmination of the 9-day exponential sitting at 5,665, and it's going to be this horizontal sitting at 5,659, and also this diagonal line of resistance. So all of them are clustered in one place, so it's going to be very difficult to break through that tomorrow, but who knows what might happen. We'll watch it, but I'm still thinking that we are under the spell of the bear flag, and we are expected to go all the way down to 5087. So that's what I am thinking, because nothing has changed from our last day's analysis. I don't see anything changing. Nasdaq opened down this morning, way below. It was gapping down. It opened way below, and it opened at around 19,010. And at that time, I was thinking that we'll have a support at 18,598, but we didn't even have to come up to there. We just bounced back, and we converted this diagonal line of resistance into a diagonal line of support. So we haven't done much actually. We ended up almost where we were the previous day. In fact, we were down by 0.02% from the previous day. So the downward trend will still continue. This was just a head fake. And with that said, let's look at VIX. VIX has gone up, and it's still elevated. It has not come down from where it went this morning, in the sense that it has closed above the previous day's close. So VIX is still hot. And with that said, I think I would like to look at PCC, put call ratio. It's also neutral, nothing there to see. Now let's go to genomics. Bluebird Bio has got a deal now, and the buyout deal is out here. And one second, let me show you the buyout deal. Okay, the buyout deal is here. This is dated March 31st, and it says Bluebird Bio shares were 23% higher at 5.03 after the company said it received an unsolicited non-binding written acquisition proposal from Ayrmind, AYRMIND, which has offered for an upfront cash payment of $4.50 a share and a one-time contingent value right of $6.84 a share payable upon achievement of a net sales milestone. So this is similar to the other SK Capital offer. So things are getting better for Bluebird. With this target of 4.50 here, you can now make sense why the stock ended at 4.88. So there is a little bit of excitement going on out there. I think it will settle around 4.5 until these two private companies, private equity companies, resolve it among themselves or jointly by Bluebird. So we'll see whether there's a competition or whether there's a partnership coming up out there. With that said, let's look at PACB. PACB gained today, but I don't know what was the reason for the gain. I have not seen any new news about it. Prime is flat. at the end of the day. It opened low and it went up, and in the process it managed to stay above the diagonal line of support. Now if you look at Illumina, it's down 0.82%, a very narrow range of trading, and it has still remained below 80.60. Now Vertex is down 1.60% today, and post hours it's at minus 0.61%. So we are still above this diagonal line of support, and we are also above the 50-day exponential moving average, the 100-day exponential moving average, and the 200-day exponential moving average. So those three are giving us support along with the diagonal line of support which we have here. So for tomorrow, 484.4 is the support for Vertex, and also it has to do a gap fill, so I am expecting that it might move up tomorrow, and probably it might get some resistance at 492.62. That said, let's look at IMTX. IMTX has fallen below the diagonal line of support, and the diagonal line of support from the previous bear channel becomes a line of resistance, and our support now is going to be 4.17 for tomorrow, and the resistance for tomorrow is going to be 4.54. Then let's look at Caribou Biosciences, which is still traveling on this diagonal line of support, continuing to plumb new depths. Nothing new here, nothing to see. ARCG has dropped with a gap down, and remember we had marked a target out here for 16.97. ARCG seems to be in a rush to meet that target. It's jumping, it's created a gap down. But one way to think about it is that gap downs are good because they act as magnets to pull it up. So we'll see what happens tomorrow. Post market, it's flat. And if you look at Grail continues to move down this diagonal line of support. Today's candle is also out there, and it is just below 25.97, which was an earlier line of support. So I'm going to mark that as red. And our next support is going to be 24.02. That said, let us look at Allogene. Allogene has converted this diagonal line of support from a previous bear channel into a diagonal line of resistance. And MACD momentum, both are looking equally bad. There are no trades in post-market. And if you look at Altimmune, it has again created a huge gap down, and this gap down will need to be filled. MACD momentum, everything is looking very weak. Iowa is down 6.46%. It's fallen below this diagonal line of support and converted it into a diagonal line of resistance. Stock is looking weak indeed. Ginkgo Bioworks is down with a gap down, and it's ended the day at $5.70. That is down 6.86%. Post-market, it has clawed back almost 2%. However, this gap fill is likely to attract the share upwards, whereas it has to move towards this double top target of 5.28. Editas has got no trades post-market, and during the day it dropped 7.20%, and it managed to breach this minor line of support, converting that into a minor line of resistance. Or is that right? Let us see. I'm just curious. Give me 1 second. Let me indulge my curiosity. So this was a line that we created. It was not a horizontal line. So what I'm going to do is I'm going to bring this line to be parallel to this blue line. So we were a little bit off in making this line out here. Have adjusted it right now. So that line which I drew right now, which I adjusted right now, is at 1.17, and Editas is at 1.16, just below the line of resistance. So it was a close call. And then we look at CRISPR Therapeutics, which is up 0.79% in post-market trade. And during the trading day, it gapped down and it breached this line of support, diagonal line of support, and converted that into a resistance. And now it's below this diagonal line of resistance. So tomorrow we'll see what happens. MACD and momentum both are looking pretty weak. mRNA is down 0.21%, a huge gap down for mRNA, converting a line of resistance into a line of support into a line of resistance. Then we have Intelia, which has gapped down below this diagonal line of support, converting that into a resistance. And of course, the gap down will act as a magnet, pulling it upwards. But MACD and momentum do not have the juice for it to move up at this point of time. And then you look at Beam Therapeutics. which fell below this minor line of support. I'm going to make that red and a little bit thicker so that small devices can see. And then this line of support also, I'm going to make it a bit thicker for the smaller screens to see. So this is going to remain our line of support, 19.06, and this is going to remain our immediate line of resistance, and this happens to be at 21.94. And then I'm looking at Verve Therapeutics, which breached this horizontal line of support and it gapped down. So the next support for it is going to be the line out here. I'm just going to make it a little thicker for the smaller devices. Our support is at 4.37, our resistance is at 4.92. And look at Unicure. Unicure also gapped down and it was prevented from falling down by this diagonal line of support of the bear channel, which will continue to remain the support tomorrow. In other words, 9.82 is going to be the support tomorrow for Unicure, and the resistance for Unicure is going to be the upper end of this candle, which is around 11.35. So that's what I have here, my friends. It's been a very interesting market, and I'm personally of the opinion that what we saw today is more of a head fake. It's not a real rally. It could be some kind of a squeeze taking place here or there. But tomorrow I'm expecting us to probably turn back around and complete the business of the bear flag. With that, my friends, I would like to end this video here today, and I would request some of you to join me in the live stream that happens at 7:45 a.m. each morning. So I would like to see you there. Take care. Have a great day. Bye for now.